G'day everyone. Welcome to today's webinar, the 3 Essential Tools for Business Success. My name's Christina Henare and I am the Client Services Manager here at Montec Carter. I will be taking care of all your questions that you might have throughout the webinar. I'll just take you through some tools that are of the webinar. As we're using Teams, it's a bit different for us, but the tools are still the same. So if you check your Teams features by clicking on the 3 buttons at the top where it says more, you can check your speakers and make sure that they are working. You can leave any questions through the Q&A tab and we'll get those answered for you during the webinar also. You can click leave the meeting at any time if you need to leave, but you can rejoin using the link. So yeah, if you do have any questions, you can ask. At the end of this webinar, we are actually going to be sending through a questionnaire. If you could fill in the questionnaire and send us back your feedback, it just gives us things that you want to know more about and can give you more of what you need. On to further, today's presenter is Michael Tobeck. Michael is one of the 4 partners here at Montec Carter and comes with a wealth of knowledge and passion for understanding his clients and the challenges that they face. So without further ado, kia ora, Michael.
Kia ora, Christina, and welcome everyone. Thank you for joining us today for this webinar. I'll just get my camera on. There we go. So just a couple of things before we get into this. So a couple of things I wanted to go through. We're using a slightly different platform to the one we normally use. So in the past we have used Zoom. Today we are using Teams. So I do apologize. If there are any issues with the technology, we will try and get that sorted out as quickly as possible. The other thing is, you might notice you can see my face. I'm sort of going a little bit out of my comfort zone here and actually looking to let you obviously see me so that we can make this a bit more personable. What you may find though is that every now and again I might avert my eyes. That's because I am human. I do have notes. So if you see me looking away, it's not because I don't want you to see me. It's because I'm looking elsewhere. All right, so let's get started on the session. So I'd like to kick things off with a quote from Dwayne "The Rock" Johnson. And the quote is that success isn't overnight. It's when every day you get up a little bit better than the day before. It all adds up. So we're going to do something slightly different today. If everyone could get out their phones and head to menti.com. Once you're there, if you could just plug in this code, it will ask you for a code if you just type that in, and it will ask you a question. And the question is, how well is your business delivering on your dreams? Now, I'll just give you a couple of minutes to do that. And then we will take a look at the results. Right, I'm just going to switch over. Let's see how this goes. All right, so we haven't had anything come through just yet. Right, so we've got a 3. We've got a 4. These are some good numbers. Right, we've just got a few more joining into the session. For those of you who have just joined in, we're just doing a Menti at the moment. So if I just go back to the presentation screen. So if you can head to menti.com and just plug in this number here on your phone, it's probably easiest. And it's just a question around how well is your business delivering on your dreams.
If I can just jump in here, Michael.
Sure.
Just so you all know, we don't actually see who's posted what numbers. It's just a number.
Thanks, Christina. All right, and now we've got a 2. All right, well, we might just leave it there. It looks like a few of you are not in the position to put that through. Oh, we've got another 2, fantastic. Okay, well, I'm sure you realize that you're in good company. Being in business can be lonely at times. And it helps to know that other people are experiencing your pain. As accountants, that is what we see, and that is why we've put this webinar on. So you can learn how you can be better and have a more successful business. So I just want to take you through the agenda for today. We're going to take a look at a couple of mindsets. The first of these is the power of 1%. The idea being that incremental changes can have significant impacts on your business. Once we've had a look at that, we're going to have a look at having the courage to change, because often those improvements that we talk about when we talk about the power of 1%, those little improvements require change, and change can be difficult. So we're going to have a look at how we can sort of adapt ourselves and our teams to be able to take on change and see the benefit of it. And then after that, we're going to actually take the deep dive into what those 3 essential tools are for creating a better business. Then we'll have a look at the next steps, and we'll finish it off with a short Q&A. Okay, so we're starting with the power of 1%. Some of you who are on the webinar may have seen my Loom videos. This is one of the Loom videos that I did. It was all about the power of 1%. If you haven't had the opportunity to see those videos, I'll just get Christina to pop a link to those videos in the chat, and you guys can take a look at those when you get an opportunity. But the idea of the power of 1% is that if you make small changes to make an improvement that makes your business 1% than it was the day before, over time, the compounding effect of that is going to have a significant difference on your business. So in this case, you can see if we were to increase our sales by 1% every day for the entire year, so 365 days, our sales by the end of the year will have increased by 37.8 times. Now, I realize it's obviously very unlikely that you're going to achieve 1% growth in sales or a 1% drop in costs every day. But the point here is to illustrate the importance of the compounding growth. One of the other examples I like to use is the idea of if I were to ask you to run a marathon in 1 year's time, most of you would think that that's impossible. However, if I said to you, tomorrow, I want you to run 1 kilometer, and then each day after that, I want you to add on 1% of distance, in a year's time, you'd be running a marathon. So I guess the other side of that as well is if we don't make those changes, so let's say your competitors, for example, sharpen their game and you fail to keep up. If your sales start to reduce 1% each day, you then in a year's time, if you, for example, have you turn over $1,000 a day, and you're dropping 1% each day for 365 days, by the end of the year, your daily sales will be $30. So you can see the opposite effect, which is it's obviously going to decrease at a significant rate if we don't maintain our levels. So as Einstein said, compounding is the greatest mathematical discovery of all time. And it's really important that we harness that when we think about improving our business. I think another point that comes out of this as well is around ensuring that you're not trying to find perfection. So one of the traps we can often fall into as business people is that we don't want to implement something until it is completely 100% foolproof. But perfection doesn't happen. It's not reality. So the idea is actually the small incremental improvements. If we can just get to a stage where we can get it in place, and then that continuous improvement over time, we're much more likely to get results. So change is inevitable. We know that. I mean, it's happening all around us, but it's not easy. Think about other businesses that haven't adapted to change and what the impact of them has been. So the first example we're going to use is Kodak. Kodak became the poster child for companies who failed to react to their changing markets. In 1976, Kodak claimed a market share of 85%. But they have failed to adapt to change, and by 2003, their market share had diminished to just 15%. Kodak actually delivered the first digital camera, but worried about the effect going digital would have on the sales of camera films. Their failure to accept the change from film to digital had a massive impact on their profitability. Now, most of us carry a camera in our pockets, instantly uploading photos to social media. And actually, by the way, Kodak released their first smartphone in 2017. Another example, Blockbuster. At the height of its success, Blockbuster had over 9,000 stores worldwide. This is another story of a business that had the opportunity to change but didn't see the value in changing at the time. In 2000, when Netflix was starting out with a mail-order DVD service, the CEO approached Blockbuster to discuss Netflix handling Blockbuster's online business. However, according to Forbes, he was laughed out of the room. In 2004, Blockbuster finally set up their own mail DVD rental service. When the CEO of Netflix mentioned that Blockbuster had thrown everything but the kitchen sink at Netflix in order to compete with them, Blockbuster sent the CEO a kitchen sink the next day. Now Netflix has over 150 million users. The last time I checked, Blockbuster had one remaining store. So I guess what those examples of just disruptions highlight is that change isn't easy. When we're riding the wave of success, it can be hard to see the need for change. We all have inbuilt habits and behaviors that we repeat. We also have so much going on in our lives that it's hard to start doing something differently. This is the formula for change. It will help you increase your ability to change. On the right-hand side, we have an R. This stands for resistance. This is what's stopping you from changing your behaviors. This can come in three forms. It might be that you've got no time. It might be that you've got no money, or it might be that you don't see the benefit in changing or of changing the behaviors. You need to build up the left side of the equation so that these variables are greater than your resistance. On the left-hand side, the D stands for dissatisfaction with the status quo. You need to understand the consequences of not changing your behavior. What happens if you don't learn how to grow your business or improve your profitability? Profit may drop, you might not be able to take the family holiday, or you might have to get rid of some team members. Then we need to have a vision. What will your life look like if you do not change your behaviors? What do you want for your future to look like? More holidays, more money, more time with your family? Having a clear vision will help you drive the change within your business. And then finally, what are the first steps you need to take in order to achieve this vision? We depict this with a lowercase f to represent the fact that the steps are small and easy to make. Remember, we talked about 1%. Remember as well, the consequences of inaction will heighten your dissatisfaction and cause the business to regress. The fact that you're here today means that you're open to change. So that's a great step in the right direction. The 3 essential tools that I'm going to show you now are the first steps you need to take to start moving towards your vision of a positive future state. As you'll see from this formula, your resistance to change has to be outweighed by your dissatisfaction with the status quo and your vision of an improved future state. So what are these 3 essential tools that I keep talking about? Well, in our view, they are an annual business plan, an annual forecast, and ongoing reporting with accountability. Your business plan is your guiding document to deliver the business outcomes you dreamed. Essentially, it's goals, right? Put plain and simple. Your annual forecast shows you the numbers you need to achieve in order to reach your desired outcome. And then the ongoing accountability and reporting means regular monitoring of your results and having someone to hold you accountable for completing your actions and achieving your goals. So let's take a closer look at each of these. So there are literally thousands of articles that you can look at online that will tell you what the components of a good business plan are. But here's what we consider to be best practice. A clear purpose. This should be a 5 to 7 word statement that explains why your business exists for your customers. And that's the key point. Why? Why does it exist? What are your customers getting from you? Secondly, a clearly articulated vision. What will your business look like in 5 years' time? Third, what is it that you want to achieve? What does your business need to deliver to you? Remember, your business is there to serve you, not the other way around. State the hours you want to work, the holidays you want to take, and how much money you want to take out of the business. It should also include a high-level budget. It's important that this doesn't go too much into detail. Essentially, what we're looking for here is your gross revenue targets for the year, and this is based on what you've recorded in the what we want to achieve section. The budget also forms the basis for the essential tools number 2. So after that, some key performance indicators. These are the things to measure that will make sure you're on track to achieve your goals. For example, sales per day or milk production per month in a farming situation, gross profit, or even the number of days team members are achieving their individual targets. Choose a maximum of 5 and make sure you can measure them. It's also really important these are relevant to your business and to your industry. Oh, sorry about that. Next, we need to have a look at your opportunities and vulnerabilities. Right, your business plan needs to identify them so your goals can maximize the opportunities and mitigate the vulnerabilities. Finally, this cascades down into goals and actions. So make sure these goals are measurable and achievable. We always talk about SMART: specific, measurable, attainable, realistic, and timely. So from there, that's your 12-month goals. These should then cascade down into 90-day goals. And each of those 90-day goals should have clear actions for how you're going to achieve those goals and who will be responsible for achieving them. This becomes really important when it comes to accountability. Now, it's important that you review your business plan regularly to ensure those actions are being completed by the due date and updated the 90-day goals each quarter. So these are the rules we follow when it comes to developing a business plan. Firstly, all key decision makers should be involved and complete pre-work before the planning session to reflect, prepare, and be heard. We always recommend using an independent facilitator to avoid people dominating the discussions, and encourages alignment between stakeholders and your key team members. Now, your business plan should be one page, perhaps double-sided. There's no point developing a 30-page business plan. It's just going to gather dust. It needs to be visible at all times, and it needs to be somewhere that helps you to guide your decision making. Feel free to share your plan with your team. It's really important that you get your team on board. This encourages your team to buy into your vision and aligns their goals to your goals. Reporting. It's really important that you report on a monthly basis to monitor your progress. And if we think about it, when we talked about setting that budget, that's something that you can run on a monthly basis, budgets to actuals, to identify how you're progressing. Now, you need to review and update your goals and actions every quarter. This is to ensure you remain on track to achieving your annual goals. Because remember, the quarterly goals have been cascaded from your annual goals. So to ensure that you reach your annual goals, you need to make sure that you're continually reviewing your 30-day goals and actions. And then on an annual basis, you should be doing a review and an update of your business plan. Some things, such as your vision and your values, aren't going to change, but other aspects obviously will, such as your goals. So what's this one-page business plan going to look like? Well, here's an example. All components are clearly identified. We like to keep things simple and easy to read and understand. You'll notice as we work through this, those aspects of the business plan that I talk about essentially are one piece of each of the one heading for each stage of the business plan. So here we've got the purpose, vision we want to achieve, and the values section. Then we have our high-level budget. We update the year-to-date column each quarter to ensure we remain on track. Next, we have the KPIs that we'll be measuring. You can see we've added targets for our KPIs, so we know what we're aiming for. Our ideal clients and value propositions are clearly identified, and these should be shared with your team. We then have our opportunities and vulnerabilities. And from this, we can identify what our most critical challenge is. Then on the back page, this is the second page of the business plan, your 90-day action plan. First, determine your annual goal. Then, break each goal down as 90-day goals. Each of these goals should be a step towards achieving your annual goals. Then work out what actions need to be taken in order to be able to achieve these goals. Then work out the actions, and then you must record who is responsible for these actions, and the due date. Is essential that someone is accountable for achieving these goals. So we recommend setting 3 to 5 goals a year. You don't want to set too many because then it just becomes too much of a burden and can become really overwhelming. So it's really important that you focus on the top 3 to 5 things in your business that are going to make the biggest difference.
Sorry, Michael, can I interrupt you for a moment?
Sure.
We just have a question. I'm preparing a budget. What about adjustments imposed by government? More information, compliance required, particularly over the last 4 years.
Sorry, I'll just need a bit more detail. So when you talk about the compliance, are you talking about the cost of the compliance to be put into the budget? Yeah, I'll need to get a little bit more information.
No problem.
Maybe if, who was it that asked that? Christina?
Sorry, Jim.
Okay, maybe if Jim comes back to you with some more information, stop me again. Otherwise, Jim, feel free to give us make contact with us after the session, and I can answer that question for you. So where was I? Yeah, so 3 to 5 goals is the recommendation to ensure that we don't overburden ourselves. So that's the first tool, your annual business plan. Does anyone have any questions at this stage about the business plan? If you do, feel free to pop them into the question pane, and we will look to address those for you. Okay, so the second essential tool is the annual forecast. In the past, you might have prepared a forecast because the bank wants you to prepare one. But it's something that you should be doing regularly. If you don't know how much money will be coming in and out of your business, how are you supposed to make informed choices? Even if your business has a positive cash flow, you should prepare a forecast because it can then help unlock a lot of cash. And also it helps you make decisions around what to do with that cash, whether it be investment or otherwise. So your annual forecast will break your high-level budgets from the business plan that we talked about into monthly targets. Now we account there for seasonality and allowing you to predict and prepare for large cash outflows. There are 3 types of forecasts which we can combine into something what we call a 3-way forecast. The first forecast is your profit and loss, which shows you whether you're going to make profit or loss each month. It gives you the flexibility to allow for seasonal fluctuations instead of lumping all income and expenditure into one annual total. It could show that while some months you may make a loss, overall you make an annual profit, or vice versa. What's really important to understand is that profit and cash flow are not the same thing. Some costs don't appear in the profit and loss forecast, so you need to make sure that you're going to make sufficient profits to cover those additional cash costs. Now that brings me to the cash flow forecast. This shows all the movements of cash in and out of your business on a month-to-month basis and allows for things like tax payments, asset purchases, drawings, and loan drawdowns and repayments. These things don't show up in your profit and loss. So while the profit and loss forecast shows you your business efficiency, the cash flow forecast shows you whether you have enough cash to survive and thrive. Remember, cash is the oxygen of all businesses. So the last forecast is your balance sheet forecast. Now this shows you whether the overall value of your business or your net worth is increasing or decreasing. It measures your assets, your liabilities, and your equity, and will show you whether you're solvent or insolvent. Highly profitable businesses can and do go broke. So the balance sheet forecast gives you an early warning of risk. For example, if you have a huge increase in sales, but you're slow collecting those, you could be in a position where you can't pay your bills on time. As you can see, your forecast tells you a lot about the health of your business. So this is why we believe it's one of the 3 essential tools for any good business, and why you should be doing it annually rather than only when the bank requests one. So here are our rules for developing an annual forecast. There's plenty of software out there that can help you create forecasts, and you should be able to do the majority of it yourself. We personally send our clients pre-work to complete before we prepare their forecast to ensure they've identified all expected income and expenditure. Start with the desired profit. So start with the end in mind. Then we can work backwards to get to where your sales need to be in order for you to reach that profit. That then allows us to identify the gaps, and that's the goals that we create in order for you to be able to achieve your desired profit target. So then we compare this to last year's results. Is your desired profit realistic? Is it achievable? We then review your figures and make any adjustments as required. Now, of course, we can help you develop your forecast and identify areas for you where you can improve on your cash flow or profitability. So the third of the essential tools is all around accountability. Reporting means regular monitoring of your results to ensure you're on track to achieve your goals. If you're not measuring your financial results and the key drivers of your business, you can't properly manage them. Technology provides you with real-time data to support informed decision-making. Compare real-time data against your forecasts and make adjustments if required to stay on track to achieve your goals. We recommend preparing monthly management reports to align to your key performance indicators, which we talked about earlier in the session. If you wait until the end of the year to review your annual accounts, the data is far too old to be of much use. By producing regular reports, you can quickly respond to any unexpected changes in your results. Of course, without some accountability, you're less likely to take actions that you need to make in order to make those responses to the things that you've identified in those reports. So that's why having accountability is so important. So people often start with great intentions, producing reports for the first couple of months, then get busy with their day-to-day tasks. Your accountability coach will ensure you dedicate time to review your numbers and check that you've taken the actions that you need to take. Accountability helps you to set aside time to work on your business and complete the actions you set in your business plan, or respond to regular reports, building better habits for your business. I mean, think about it, right? If you're reporting to yourself or someone in your business, it's a lot easier than having to explain to an independent person as to why something hasn't happened. It really makes you dig deep. So your accountability coach must be someone independent, and they must have the backbone to give you consequences for inaction, but the heart to care. They can't be afraid to upset you when you need a dose of accountability, and they need to care about you achieving your goals that you've set. You must have clearly documented actions with due dates to ensure that you have the deadlines to work towards. And there must be consequences for inaction. If you keep failing to complete your actions, something's obviously broken, and it's likely you've either got the wrong person holding you accountable or you've set the wrong goals. So what are your next steps? Well, my aim is to help you take today's message and implement some positive changes in your business. So what are your next steps from here? Well, doing nothing isn't an option. We've already seen how doing nothing can actually cause you to go backwards. And it's unlikely that doing the same is going to give you the same results as you've had in the past. So make a clear plan that you can articulate to your team. Remember, it's really important that your team buys into this. Develop your forecast for the year and repeat this every year. Find someone who will hold you accountable. Focus on what you can do, as opposed to worrying about what isn't within your control. And of course, we're here to help you should you need it. Now, as I've already mentioned, the information in this educational webinar is obviously general in nature. It's no substitute for specific tailored advice and support. So there are several ways that we can help you more specifically beyond today's webinar. We can actually help you implement these 3 tools into your business. Our business planning service consists of a 4-hour session where we'll develop a 1-page business plan, just like the one you saw earlier. We can also prepare a cash flow forecast. And for those of you who need accountability to make the changes and achieve your goals, we offer quarterly coaching sessions where we update your 90-day goals and actions and hold you accountable to achieve them. Or we could make it monthly coaching if you feel that you need more regular accountability. Changing the way you run your business is all about building better business habits. Making small changes which add up over time. Remember the power of 1%. We have a building better habits worksheet that we can send to you for free. This will help you identify the one area in your business that you'd like to consciously make improvements on each day. And we also offer, as always, a complimentary 1-hour meeting to discuss what your goals might be and how we can work together to hopefully go about achieving them. So at this stage, I'll ask, are there any questions from the session so far?
Yes, we have Leanne Michael.
Yeah.
She's asked if you have tips on how to comply with the extra requirements, for example, expand reporting or added functionality in accounting process to incorporate the additional information.
Sorry, I'm not quite sure I follow the question. Is it written down somewhere?
It's in the chats.
Okay, cool. Just give me a moment. I'm not quite sure what extra requirements what's being talked about. What are the extra requirements that we're talking about here?
Okay, there was an extra question from Jim, but he didn't need a comment on it at the time, but it was about budgets and the government's changes.
Okay, here we go. As government has changed. Yeah, okay. Look, let me get back to you guys. I might give you a Leanne and Jim. If you could just drop your number into the chat, and I'll give you a quick call following the session, because I'm not exactly sure I completely understand what the question is. Any other questions at this stage?
That's all I've got at the moment.
Okay, thank you, Leanne. Thank you, Jim. I see that you've dropped your numbers in there, so I'll give you a quick call following the session. Okay. Well, before we go, I thought I'd just share this quote with you. Action is the foundational key to all success. Commit to at least 3 actions you will take as a result of today's webinar. Write them down, give each of them an owner and a completion date. Remember, if you do need support, we're here for you. Also, just following on from Christina's comments earlier, we will be sending out a feedback questionnaire following the session. We would really appreciate if you could spend the time just to fill those questions out. It won't take long. It's really important that we make sure that we're providing the relevant information to our clients, and also to get your feedback on what you thought of the session. So if you could do that, it would be greatly appreciated. So thank you for making the time to attend this webinar. We appreciate that your time is obviously very valuable. Following this webinar, as I said, we'll send you a survey link to your inbox. So if you could please complete the brief survey following the session so we can continuously improve and make improvements where necessary. We hope we've given you plenty of ideas to ponder and some clear next steps for you and your business. Thank you.
Thanks for that, Michael, and I hope you all got some valuable information out of that. If you need any more information following on from this webinar, please feel free to flick us an email and get in touch so we can get back in touch with you. Other than that, I hope you guys have a great day, great rest of your week, and enjoy.